like knowing what you know, if you
Right.
could add something or subtract something or change something from this proposed amendment, that would still be a win, right? That would help these
Mhm.
younger families with these huge tax bills that get reset, which is what a lot of what they're trying to fix. And also make sure that you guys don't have to make extreme changes within your organization that would also affect residents, right? The things we're talking about with the shortfall in the budget.
Mhm.
What's missing from this proposed amendment that you think would be a good win, middle ground that would help both sides of the aisle?
Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
This is Tampa Home Talk, and I'm your host, Katrina Madewell. And today we have a special guest in the studio, Mr. Bob Henriquez. Hillsborough County Property Appraiser is my guest for the day. Hey, thanks for joining me today, Bob.
Katrina, it's a real pleasure to be here.
Look, I just want to play devil's advocate for a moment, right? If I may. So, yes, it's a real problem that local agencies are going to have to fix, right? If you have that loss, and 15% is a big number on something like a county like Hillsborough County. The challenge is when you talk about, half a bite of the apple, right?
Mhm.
The core services you need, police, fire, the roads to drive here, all of those things. There are so many tourists and people, second home people and other people that visit the state of Florida that partake in that, right? They may have to call the police or have assistance from paramedic and fire, yet they're not paying any property taxes to, put in their share in what we all enjoy here in the Sunshine State. So I think the problem is it shouldn't be passed just to the homeowners.
No,
Definitely a
well,
portion.
and we have various different bedroom taxes and tourist taxes and all those kinds of things, and they've talked about some of those things to help backfill some of this. But that again, that's not part of this. What we're looking at, it's basically okay. We're going to figure that out down the road. I will tell you, one of the suggestions in this bill is to lower the non-homesteaded cap for right now. There's a 10% cap on the assessed value for property owners that have non-homesteaded property.
So investment property, commercial
right.
property.
Well, and when the governor made this proposal, he spoke to this as a way to save small business. This proposal actually is all non-homesteaded property, whether it be industrial, commercial, vacation homes, as you spoke to, it's everything. That's an additional $83 million of lost revenue going forward, conservatively, and it would rise every year going forward to Hillsborough County, and frankly, a large business like a Tico or that $10 million vacation home on the beach is going to get a big break as a result of this as well. I'm not sure how or why that was thrown in there, other than I will tell you that it's kind of the opposite of your argument that they should be paying their fair share.
Right. Now, what is the proposal for the non-homestead property?
It's to lower the 10% cap to 5%.
Okay.
And again, that's again, the sell was that this would help small business, but the reality of it is it's going to help big business a heck of a lot more than it is your local coffee shop that's mom and pop owned. So that's in here as well. It's kind of not being talked about as much. At the end of the day, it's easy to create winners and losers in the political realm of saying, well, we want the tourists, we want those damn Canadians to pay their fair share. Well, they're not coming right now, right? After tariffs and whatever, they're mad for one thing or another. The economy, we've been blessed that the economy has been strong even through COVID. In fact, we came out of this a heck of a lot better than others.
We did way better than a lot of other states.
But it's not always going to be like that. I mean, realistically, there's going to be a downturn somewhere along the line. There's going to be a recession. There's going to be something an upheaval. We've had our storms, we've had whatever. And so to kind of say, well, we're going to depend on the tourists to pay to make up the difference. It's probably short-sighted. There's probably not enough there to make that happen. So,
So
it's complicated.
I would love to ask you a question, just getting your opinion, right? With what you know as the property appraiser, understanding this at a high level, also understanding it from the personal level,
Yeah.
right? You're there with the person that had their property taxes quadrupled, right? Which is extreme, but you know what I mean. It's very easily you could see where it doubled because of where it reset.
But again, understand that's the system. And so
Correct.
you could make an argument that the folks that have been benefiting, that have been in their homes 20, 25 years, are paying on an assessed value that's artificial. And so these
My
new folks
question
are
for
actually
you is,
paying based
though,
on the system the way it is. But
like knowing what you know, if you
Right.
could add something or subtract something or change something from this proposed amendment, that would still be a win, right? That would help these younger families with these huge tax bills that get reset, which is what a lot of what they're trying to fix. And also make sure that you guys don't have to make extreme changes within your organization that would also affect residents, right? The things we're talking about with the shortfall in the budget. What's missing from this proposed amendment that you think would be a good middle ground that would help both sides of the aisle?
well, I think it's very complicated. I think that I would have proposed additional exemptions for first time home buyers.
Like permanently, temporarily?
No, I think it would have been. I think it would have phased. It would have been over the course of time for a period of time. I think I would have proposed a phased in reset.
Yes.
So that the reset, in theory, so if your property taxes are going to go up from $1,500 to $6,000,
Correct. Great example.
phase it in over 3 years or 5 years. In
Yes.
theory, you're more able to pay that additional couple $100 a month every year going forward, and it'll finally reach. So ultimately, the taxing authorities get their tax revenue of what the actual the value of the property is, but it would happen over the course of time. It would help rein in spending as well as make it easier for home buyers. And in theory, hopefully, especially for first time home buyers, salary wise and otherwise, you should be able to handle that better down the line.
So that's exactly what I had said when I'm meeting with clients that are like, oh my gosh, I have to sell my dream home now because I can't afford the taxes, right? Yeah. That's the unfair part of this that I think government is trying to fix. And so you're very on point with what I said with nobody's property taxes should triple, quadruple, double, right? So that phase in over time very much looks like 3 years is not enough.
You could also lower the assessed value so that only a certain portion. Now this is a little bit more complicated, and you have this in other places. So rather than increasing the homestead exemption, you lower the amount that actually is taxable. In Florida, it's 100% of value minus cost of sale. So in general, our assessments range somewhere around 80% of the actual value of the property for sales purposes. That's another proposal that was out there. I think one thing that would have made sense, if it's really about the amount that's spending, is to kind of say, okay, spending is what it is. It's good, bad, or indifferent. We can rein it in over the course of time. I would have put guardrails around spending at the local level and not had to mess with the property tax system whatsoever. By doing this, I would have said we're going to say that spending at the local level can't be more than inflation, whatever that may be.
That's excellent.
The same way that we have to deal at the end of the month. Again, how much has our bills gone up? How much has groceries gone up? Plus a government cost index, because as we've spoken to, there's some things in government, whether it be collective bargaining, whether it be your retirement systems, certain things that cost more on top of that. So say if inflation's 3% and you add whatever it is, 4 or 5% government cost index. So now you know that the spending isn't going to go up more than X percent a year.
Yeah.
It would rein in spending. And then if you want to do additional spending because you, at the local level, decide you want to build a stadium, you had a storm and you need to spend, whatever it may be, it either needs to be a supermajority vote of the county commission, city council, or send it to referendum. That way you would say, okay, we've said spending's what it is. It's not going to outstrip. It's not going to go up the way it has in the future. We put guardrails around it.
Bingo.
And then whatever, if you get increased revenue as a result of the values going up the way they do, you create a forced rollback so that additional revenue over and above these guardrails I've talked about would be automatically, you would lower the millage rate to to commensurate with that amount. So in essence, you're going to be the taxpayers going to be paying less taxes than they would pay otherwise under the current system. So they would get a break. You can do that across all property types.
So say more about
Homestead.
that. So they're collecting additional money in tax revenue. What do you explain that a little bit more? What are you saying?
So in theory, this is what. So let's say that, and again, I don't have the exact numbers in front of me. I had to do it on my desk because I thought about this, and I brought it up to some folks in Tallahassee when I met with them. So let's say that you've put guardrails around spending at the local level. So you say Hillsborough County can only spend 8% more next year,
right?
Whatever it is. I don't know what they're spending.
Just
whatever it is,
it's 8.
and and you can spend less if you want.
Right.
Let's say it's 8%,
right?
And I, again, if you say each and every one of us in our lives are spending 3% more in inflation every year, plus whatever else the cost of things are going up. So you say, okay, 8%, but as a result of property values rising, which right now they're flat at the residential level, are actually going to be down a little bit this year. If for some reason your actually revenues are going to be higher than, so let's say at the end of that time, you're going to have.
The numbers for Hillsborough County,
right?
In 2018, taxes collected were $853 million.
Right.
In 2025, taxes collected were $1.6 billion.
Okay, so now let's say that you're going to collect $1.6 billion from last year. You collected $1.6 billion. Next year, you're going to be limited in spending $1.6 billion plus X percentage, inflation plus some government cost index.
Right.
So let's say additional 6%, right? And that's the limit. So when you go to budget what you've spent last year plus an additional 6%. If the revenues coming in are
higher,
then commensurate with that, you have to lower your millage rate so that the people are not going to pay additional are going to pay additional property
taxes are paid in arrears. So where are you proposing that surplus goes? I mean, why couldn't they invest that on something that would make money so that there's not this yin and yang later? I guess.
Well, I mean, the idea is that at the end of the day, you want to give the taxpayers a break. The issue is you're kind of coming both. You're coming from the spending perspective. You're reining in the future spending at the local level, and you're also reining in the amount that property taxes can go up over the course of time, because they won't go up more than this amount of spending. So it kind of gets at both parts, and you don't have to mess at all with the property tax system as it exists now.
Yeah, I mean, there's some big changes coming. I think it's going to pass. What do you think? I think it's going to pass.
60% is a very tall bar. Now, I will tell you that because somebody told me the other day, well, weed didn't pass. How will this pass? I don't know.
That's super biased.
Yeah, I know that, but I understand.
Everybody doesn't smoke weed. Everybody's affected by inflation.
I understand. I laughed at that. So it was funny that they said that. But 60% traditionally, and these kinds of things have not passed. We had an amendment just a few years ago to raise the homestead exemption to $100,000. That didn't pass. Throughout the country,
I think
timing's different now. But I think that ultimately, I'm hearing. Listen, I'm out there, as you know, all the time, speaking to groups on almost 2 or 3 times a week. It seems like now, people are tuned into this, and so you have folks that are just, they're feeling the crunch, and their initial visceral reaction is, "Damn right, I want, I'm for it. I don't care what it does, I'm for it." But then there's a lot of other folks out there that when they start to hear the numbers and the idea that, well, we're not sure that we're going to be able to fully fund, the services that we're used to. And keep in mind, we're still going to pay property taxes because the schools were removed from this proposal. That's the initial proposal from the governor changed quite a bit before it came on the ballot,
which was good.
So you're still going to pay the school portion. I will tell you, schools are not unaffected by this. The idea that just because you're paying the school portion of it, to me, remember, if you're trying to build a school or do something, there are indirect costs and indirect inputs from local government to help you that prop up the school system.
Right.
So if you're in my mama, where it's growing like crazy, and you've got schools on the books to be built, and you've got you've got to build the infrastructure for that school. You've got to build the roads. You've got to put in the traffic
Which they
lights.
typically do through bonds, right?
You've got to have the public safety aspect of it, which again, none of that's guaranteed under this. It's very important for folks to understand. It's really easy for the governor or others just to say, "Oh, come on, you got to be crazy." That like we're not going to fund police. Yeah, I mean, I understand that, but how about fire? Fire rescue. There's a lot in this, and then you start talking about the other things that we're used to, libraries.
Yes.
Those things are they luxuries, or are they things we're used to having? And so there's going to be a pretty healthy discussion about this, remember, it's not one size fits all either.
Right.
Hillsborough County, over the course of time, maybe could find different revenue sources, could probably figure this out to some extent, with some loss of services. There's a lot of bedroom communities out there that are going to be, and other taxing authorities. That's the other thing that people don't. So first of all, let's talk about small counties. A place like the Villages, where you have 90-some% homesteaded properties there.
Mm-hmm.
They're
going to have a big impact.
I don't know how they paint that gazebo where they all go and dance at night. So that's going to, those small counties, and there's been talk, well, we'll backfill that for a period of time, but what does that really mean? And remember that we're talking about taxing authorities, not just Hillsborough County, City of Tampa, Temple Terrace, Plant City. We're talking about special taxing districts like Aviation Authority, Port Authority, Children's Board,
Stormwater,
Swift Mud. A lot of those, their budgets are almost solely based on property taxes.
Right.
And so Children's Board, is that a core service? I mean, so that you're a single mom or can go to work during the day, they have to have a service for their child or whatever it may be. Is that something that we need to have? Affordable housing? What does it mean for affordable housing?
Yeah.
Is that a luxury, or is that right? Do we change the nature of how we look at if you're a local city council person or commissioner? How do you look at development? Do you look at we want to have more apartments and more non-homestead because they provide more tax dollars, and less single family? Do we want to build more luxury homes, or do we want to
higher tax base?
We're higher tax base. There's a lot to this that would fundamentally change the way we collect revenue. It's just something we need to think about.
Yeah.
And ultimately, Tallahassee then takes a tremendous amount of local control away, because they would, if they become the funding source for the non-essential services or non-core services, or core services that can't be funded under the scenario, do they then have the decision making of what our core services at the local level? Do you now no longer have a say-so in what your community funds, what it likes, what it wants to look like over the course of time? Or does it give Tallahassee, as we've seen in Tallahassee and Washington to some extent, where certain decision makers can hold certain other decision makers at the local level hostage because you have a parade they don't like, you have a policy they don't like, you didn't endorse me at in the last election. There's a lot to this, and I actually have a great deal of confidence that the voters will think all of that through and not just think, again, the visceral reaction is, I need the money right now, I'm hurting. But all those other things that are stressors, I can tell you personally, our offices aren't filled. Now, there's a certain amount of manufactured outrage as a result of all this, because we don't want to talk about it.
Right.
But we don't have a whole lot of folks in our office upset, with pitchforks and
right.
and lanterns.
Right.
It's not the number one stressor. It has become that because we've talked about it so much. But property insurance, although it's better than it was a couple of years ago, has not stopped going up for a lot of folks. And we're only a couple storms away from it going crazy again. Gasoline, I guess now, if the war is really over or whatever, I guess maybe it comes back down. But the other cost drivers that are squeezing us are going to continue to happen. Yeah. So if you save $1,000, $2,000 on your taxes this year, doesn't mean that your property insurance isn't going to go up $1,000. Your grocery bill is going to continue to go up. So there's a trade-off here in understanding it's an overall affordability crisis. And in Tallahassee, they felt they had to come back and be able to say we did something about that. Whether or not this is the right thing, we'll have to make that decision. But I honestly think that the voters are going to think this through. I wouldn't just off the hand say it's going to pass. 60% is a high bar.
It is hard. Very high.
But I think that you're right. The atmosphere right now is different
Yeah.
for various different reasons.
I think the problem is, and you hit the nail on the head with a couple things that we both talked about today, is the homestead exemption is not proportionate with the valuation, right? That's a very big thing. And instead of, hey, we should have been fixing this over the last several years, not boom, now this is a problem, right? Because it's been ongoing. Cap local spending with inflation and other things, that's so on point. And then that tiered, like, again, no one's property taxes can double, right? If you put in that slow, and I think 5 years would be the minimum. I'd almost argue and say it should be 5 to 10. 3 years is not enough. That at least gives this person that had this dream of home ownership the ability to figure this out. It's just some surprise that their taxes double.
Yeah, and there's a couple of things in here that we're not sure. There's the 5-year residency requirement.
I think that's huge. I think that's huge.
But it was found unconstitutional in 1982. And so
they think they're going to remove that.
I'm not sure that there's a severability clause within this that allows you to remove it without killing the whole thing, or if you can just remove it and the rest of it goes forward.
I think they have to think about that, because what we don't want, right, is again this knee-jerk reaction thing again, which in my opinion is how we got here after COVID. Everybody worked remote. Florida was the free state, right? So everybody and their brother's mother moved here, right? Which taxes.
By the way, under the scenario, they're going to get a much bigger break than the person that's been in their house 25 years in terms of overall amount.
Yeah. So I mean,
so it's kind of interesting.
So the point is, like, going back to the whole 5-year, I think that's important too, because we don't want these people also flooding to Florida, squeezing out the people that are 5 generations.
No, I understand
like
that.
us.
But again, there's an equal protection issue that it was this concept back in 1982 was found unconstitutional. Now, obviously, the Florida Supreme Court's much different than it was back then,
Right.
In terms of the way they're making decisions. So we'll see what happens if that's brought up as an issue. Also, something that was thrown in there that people wouldn't pay attention to because it's kind of insider baseball is it says that you can qualify for the $250,000 exemption if you were a Florida resident prior to December 31st of 2026. It doesn't say homeowner.
Yeah.
It says resident.
I think that's perfect.
It is, but it's also problematic in terms of it without, they would have to put some to let us know, because we're going to have to.
Yeah.
What is a resident, right? Is it a college student? Is it and so there's some things as far as that goes. In theory, I mean, those are the kind of things we do now when we're looking at for like homestead exemption. But again, that was kind of thrown in there. So it's 5 years, but it's perspective for folks that move here after 2027,
right?
Or January 1st, 2027. There's a lot here that they, again, in concept, I think all of us can agree that something should and could and take place. Property tax system is ripe for reform.
Right.
The question is, was this the way to do it all at once, or should they have phased it in? Maybe the $250,000 is appropriate. And I look back to when the homestead exemption was created back in the 1930s. If you were to index it to inflation since then, you'd probably be somewhere I don't know if it's 250, but it's in that ballpark.
Yeah.
But maybe if it was phased in over 10 years or a longer period of time, it would have been easier to figure out the backfilling of the lost revenue. It's just all of a sudden at once. It's a lot.
One final question I have for you, and then we'll probably wrap up this episode. As this proposed change is written, if it passes, how do you see this impacting your office and the way you guys run? And what are some of the biggest problems and challenges you see if this happens? And what are some of the benefits you see of that?
Well, in terms of what our office does, we will still assess the value of property and still do what we do. It'll be more challenging from the standpoint that we're going to have basically more than one homesteading system, because you will have this 5-year. So folks that move here after 27 will be basically under the old homestead, up to $50,000. Actually, it's flat $50,000 under the scenario, going for 5 years, and then we'd have to know when to reset it. When to reset it to the 250.
So that probably will require extra people or systems or something.
Something like that. Yeah. And theoretically, then we'll also have to figure out this residency requirement. What qualifies as a resident, what doesn't. and then probably our homestead enforcement and in terms of, I mean, listen, right now, folks need to get their, although they should do that anyhow, get your homestead because, it means it's going to mean a lot more. So we're anticipating that there'll be even more, homestead applications and probably maybe even some more people that are trying to get a homestead that maybe shouldn't. And then, so there will be additional work on our part, but that's, but materially doesn't change what we,
Right. Are your systems set up to support those things and track those things easily or no?
Our office is on the bleeding edge.
I don't know how antiquated your systems are.
And humbly, I will tell you that we have, we're the envy of property appraisers offices throughout the state. And I say that not to be self-aggrandizing, but the reality of it is we've cut our budget. This year will be 5 times in the time I've been in office. We've cut our office about 20% smaller than it was then. In terms of FTEs, from 134 to like 85.
FTEs
those are full-time equivalents of actual employees. And at the same time, we've cross-trained. We've created public-private partnerships in a lot of different areas. We've automated so much of what we do, and so we're probably better prepared than a lot of other property appraisers to deal with this and look for those kind of challenges. But again, if you look at our office and the number of 570,000 properties, our budget and and the number of parcels, we're number 1 in the state every year. But there's a whole bunch of other smaller counties out there that aren't as prepared to deal with this as others. The other thing is, how does the budgeting take place? Originally the constitutional officers, tax collector, supervisor of elections, and others weren't included in the original core services. They did include those. I'm glad they did that. The Senate added that to the bill, into the constitutional amendment.
Because they are.
But that doesn't mean that we're guaranteed funding.
Right.
So, that's another thing that could change, going forward is if we do have more to do, if the tax collector has more to do, if any of the other constitutional offices, public defender, state attorneys, all of those folks, there could be a strain on that because ultimately police and fire need to get funded first.
Right.
And then you also have this idea that you bonded out money at the local level based on projected future revenue.
Yeah. So how to fix that?
And again, they threw that in there as one of the core things that you have to. That's something that's the misnomer because again, it's a core service. However, it doesn't guarantee that it's funded. It just says, if you have $10, before you spend anything on any of these non-core services, you're going to spend those $10 on these core services
first. Yeah.
But how do you prioritize those?
Yeah.
And if you look at public safety budgets, traditionally are 60% or more of that operating budget, they're going to take the vast majority of that. The rest will be divvied up amongst the rest of the core services, and then the things that we don't consider core services.
I think we're going to have to get creative in places and spaces and how we use things. I mean, going back to even what you said in terms of the library, and I was thinking about that because it's something I read this morning about the law changes in July 1st, right? We get updates or amendments to the law changes. One of the things where I saw that the state is requiring schools to basically report any additional land or things like that they have. So when I say that, I think about just even a big county like Hillsborough, right? And the proposed new stadium and all these things and parking. Like, how can we use some of the things that are government properties to, you hold events, right? And something that's after hour, just things like that, being more creative in the ways that we raise money that allows spaces to be fully utilized, things like that.
I think that goes without saying. That should happen now, and maybe it's not happened to the greatest extent. I think when you put all those numbers together, you're not going to come up to $500 million of lost revenue. So that's the key. I mean, again, if your inclination is, and I think that's most people right now, because there's a general mistrust in government and everything right now. Everybody's just angry and mistrust of everybody and everything. It seems like, unfortunately. Then when you hear those other things, it props up that preconceived notion right away. And then you're like, we're all good to go. I think we just need to be think a little deeper than that. and there's somewhere in between there is where it is. But you're going to hear both sides. This is going to be this is going to take the air out of the political, discussion till November. And on one side, you're going to hear that the fabric of the universe is going to tear. We're all going to fall through. And on the other side, you're going to hear, that this is not that big of a deal. We'll figure it out. I don't know. Individually, we'll have to make those decisions. Our office, what we would like to do is provide as much information, be available. That's another thing that's difficult because the legislature passed a law based largely on the whole, Hope Florida deal, the money that was then spent on advocating one way or the other against a couple of amendments that were on the ballot last time. So now it limits local government. We have to be very concerned as to what we put out there. We had a calculator that we had put the proposals on our website to allow people to see what their individual amount. We're not sure that we can do that under that law anymore. Ooh. The state isn't under the same law, so the governor's been able to put out a calculator, which
doesn't help because the millage is different and everything is different.
Right, but it advocates for the amendment, right? It clearly does. So people are just going to have to, you're going to hear both sides of the story and have to figure out what it means to them.
We're going to be following it very closely. Of course, as this passes or doesn't we're going to be talking about it, and we're going to be talking about some of those changes. And I'm sure we're going to have to get creative. We're going to have to find a way to make this work. And unfortunately, it's like that pendulum swings and it's after the fact. And then you have to go through the government red tape to get it passed. But in the interim, what do you do?
Yeah, I will tell you that the most economists and most folks that look at this say that because one of the issues for folks like yourself that are in the real estate market, they thought, well, maybe this will get the market going. It doesn't, it doesn't automatically do that. In fact, there's a really good argument that all it will do is adjust sale prices higher. And it'll change the nature of maybe what properties are more desirable than others, but it doesn't necessarily help that situation that the average home buyer right now can't.
Yeah. I feel like there has to be some relief for the first-time home buyers. Again, making this, the numbers don't add up. 50,000 is too low for a median price. That's now more than double the last time it was modified, right? So that's the thing. And then the phase-in is huge. That should have definitely been part of the proposal.
Yeah, and ultimately, interest rates have been high and continue to be.
Well, argue to that, right?
I know. 32 years. That's what
I think the business they were 12%.
Again, that's what people became used to. That's
right.
Interest rates are not supposed to be 1.5%. That has an effect on things.
Yeah,
too.
if people have an interest rates like 2-3%, which some people have, right, on their primary homes, I will tell you that that's the government basically borrowing money at almost 0%. That is not sustainable economically at all. No. And we should have slowly increased the interest rates a lot sooner after COVID, right? A lot of the free money shouldn't have passed, but that's, it's all.
When you look at, nationally and in Florida, somewhere around 400,000 as the median home price. And so based on that, what does it cost for a family, to run a home? Right. So you have to make $100,000 or more a year to be able to sustain that home, pay your bills, mortgage, insurance, and then have a little extra for, whatever, Texas Roadhouse once every 2 months or something. I don't know.
Yeah.
And then you look at the average income nationally for folks at, 82,000 or something lower than that. Right? Somewhere I saw that number, and you realize that the dream of home ownership, the American dream, is not attainable for the vast majority of people out there. Mm-hmm. This doesn't fix that.
Well, and I've said
it may help somewhat, but this is a much larger issue. And so what most of those folks end up being renters, right?
Well, and I've said for a while, the way we do it as Americans, we just have to think differently about it. And if you look in other countries, they do stuff very different than we do here in the United States. And a lot of multi-generational housing, we'll see more of that. It's very common in other countries.
Yeah, absolutely. But, we're also very, we're very provincial in our thinking here.
Right.
And so if it's something that some other country's doing, well, they can't be any good because we're better than everybody else.
Yeah.
To some extent, I understand
Yes.
that. We all grew up here, but
Yes.
it's a much larger issue in terms of, and I will tell you, this year in the market, although we're seeing an overall the residential market probably declining 2 to 3%, and overall it's a big quote buyer's market in certain sectors. The luxury market's still doing great.
Yeah.
The haves have.
If I could comment on that, and I did a market update, I'll do this at minimum once every quarter. Quarter one of 2026 is actually slightly improved over quarter one of last year.
Yes.
So this is what I mean by the rebalancing of the market. And, Florida Realtors, where I pull all the data from, because it's a lot faster than manually doing it, which I could do. They also started adding in different prices. Like they had too big of gaps in the data that they were tracking. They widened that, which is good because you can see the price points that are moving, and where the bulk of the activity is and that sort of stuff. So we as Americans, we got to make some changes and have some accountability, right? For our own home. Like there's a lot of, like you said, we're consumers, right? That's what America is driven on. But I think some of those old school ways of thinking in terms of having a budget and saving money, we all have to come back to that, not just in our home, but in a government perspective too, right? That's fair.
Can you tell my kids that?
Yeah, I try. I think that's my next career is teaching these young folks about money. Anyway, the conversation has been fascinating, amazing. Thank you for having it with me. Not everyone is open to doing that, especially if they feel like it's an attack on their government or on you, and it's never that. It's just meant to be educational for the person listening.
Yeah, I appreciate it. And I appreciate the opportunity to delve into this a little deeper. And I think I have a unique perspective, having been in this office 13 going on 14 years, and then having spent 8 years in the state legislature as well. And so I kind of see, how the system, the issues in the system, the inequities in the system, and also how the political world and realm kind of works. And so
all those things are important as you're thinking about making changes like this.
Right. And again, I think that, we went round and round with this concept. There were other, I think, various different ideas and bills that went through the legislative process, some better than others. And then we kind of let everything kind of sit, and then they came up with this idea. I'm not sure that all of these unintended consequences were considered, but we'll see what happens.
Yeah,
we will survive, but it's
we'll figure it out. It might be painful for a minute, but we'll figure it out. Well, this is Tampa Home Talk. I'm your host, Katrina Madewell. Our author number is 813-377-2775. If you've got some questions you want perhaps Bob to answer them the next time, or a topic you would like us to cover, call or text 813-277-2775. We'll be glad to cover that in a future episode here on Tampa Home Talk. I'm your host, Katrina Madewell. Remember, love where you live, or we're going to fix it. Welcome home.